Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief with you, buddy. Good morning. Good morning. It is Friday, TGIF, the 18th of October. Yeah, it looks like we're live on YouTube. Good morning. Good morning. It is. Happy options expiry day. This is the third Friday of the month. So obviously a lot of, with this current market and politicians and stuff being wonderful. Maybe I'll turn off my camera. I don't need to see how beautiful I am. Slight maybe market manipulation going on. I got a funny feeling that's the case. So this is a very heavily manipulated market right now. So it really shouldn't surprise us coming into Fridays. And if anything, I'm almost thinking it's not a bad idea, considering options expiry and the amount of pressure that these people put on the market, to actually go and buy. If you're planning on going the other direction in the market, go and buy your option on Fridays. I missed a Friday buy window about a month ago on my remaining S&P put options, and I'm kicking myself for not doing that. So I suppose we'll get to that in a bit, but I went and picked up another S&P 500 put option here. Ralph was in the lounge saying, I bought one yesterday on the low volatility, and I was like, damn. Peter, you're learning quickly here. That's like level 3 stuff. So pace yourself. Get really in touch with your trading plan. You are eating your vegetables right now. Actually, I think you guys, are you on risk management now in the level 1? So if anything, you should actually, this should be a really good exercise for you to go and study the cost of buying portfolio insurance right now, and also probably a really good conversation about Ralph said there this morning in the lounge. He went and bought a put because of the low volatility. Implied volatilities, and actually the level 3ers right now are doing implied volatilities, so they're having fun learning about implied volatility. And we sort of talked about this a little bit recently, but we're right down at the bottom end of the range for the put options implied volatility premiums, so you're probably finding that portfolio insurance is relatively cheap right now. But I popped in and I answered a couple questions with regards. Somebody asked, for the exercise for the level 1ers, we want to get you to just think about, for now, just think about put options as a way to buy like house insurance or car insurance. You can buy portfolio insurance with put options. And somebody had asked, well, gee whiz, I thought these put options were really cheap, but I looked at this option and it was only 23 cents and it's at the money. And that gentleman, the assignment was to go and price 1-year insurance policies. So you were looking at an October option that's basically expiring today. So obviously, and the level 3ers are just doing this now, understanding the value of time and how theta plays into that options pricing module. But the point here is an option with only a day left in time, that's not really an insurance policy. And you wouldn't go and buy an insurance policy for your car that expires tomorrow. So that's why the option that expires today is so cheap, is there's just no time on it. So the assignment for you level 1ers was to go and price a 1-year option. Anyway, that's here nor there. Point of the matter here is volatility is right down at the bottom end of its range. So people that were interested in buying puts, that kind of stuff, this actually isn't a bad area to consider shopping. And actually that's a good dovetail, because I have now included a couple new indicators that a site member found on TradingView. We used to only be able to get these, the put call ratio and the bullish percentage index. We used to only be able to get these on stockcharts.com. And I include that link for the level oneers, and I would still suggest you bookmark that and keep that in reference. But now we can actually put some of these indicators on TradingView as well. So put call ratio, really valuable. And the long and short of it here is this is the same sort of logic as the VIX. And to answer your question, John, and actually, again, this is a great segue because we'll move into John's report from Down Under. But while you're watching John's report, keep this in mind. The put-call ratio that you just type in here, PC, and the symbol specifically is USI, I guess that means US Index, PC on your TradingView platform. This John in his report says it's the total, and I didn't understand that. Well, in essence, it is all of the puts and all of the calls on the Chicago Board Options Exchange. It's a really big contract. So that's what they mean by total, is that they want to, they're looking at the entire aggregate market. And I also noticed, John, if you're watching this later on, and you'll see this in his report, he's correlating the put-call ratio with something like the S&P 500. I would actually suggest, John, that maybe you and I talk about maybe tracking something like the New York Stock Exchange Composite Index, because that will follow the entire market, whereas the S&P 500 is just the biggest 500 stocks in the market. So when you today we're going to air the Down Under report. They've done a really good job. John's given you a lot of really cool stuff to think about. But John takes this put call ratio and he divides it, or I think multiplies it, I don't know, watch the video, you'll see, by 1 to get an inverse of this ratio. But what you just simply have to understand is, out of the box, this is the ratio of the number of puts, remember that total number, John, versus the number of calls that are bought on any given day. And normally, people don't like actually playing the market short. I think I've told you guys this before. The general tendency from the public, and I'm also the same way, is I would rather play the market long than short. And what's really weird is you get into bear markets and people that are aggressive shorters and driving the market down, making money, the public starts to really get angry at them, and they can literally create witch hunts out of hunting for people that are aggressive shorters in the market. So on balance, shorting the market. I remember one politician, he come out and goes, "Shorting the stock market, that's un-American." It's like, no, actually, shorting the stock market is the ultimate personification of being American, being free, being able to choose what you can do on your own without somebody else telling you, and not being prohibited to do stuff in the marketplace. If you think the market's overvalued, short it. But I find it amusing that even politicians can spin, you having the freedom to do whatever you want in the market as being un-American. But anyway, that's here and there. So the point of the matter is, out of the box, the put-call ratio is measuring the rate. You see how it's just on a scale of 0 to 100. And in essence, a reading above 100 means that more puts are being bought than calls. And a reading below 100 here means more calls are being bought than puts. It's just, the numerator divided by the denominator. Where am I going with all this? Put-call ratios right down at the bottom end of the range. Thinking about market tops when we get down here, very similar to the VIX index. It makes sense to me. I didn't really want to get too much into breadth here, but, it is interesting to see the VIX down nice and cheap, and the put-call ratio, in essence, nobody's buying puts right now. Everybody's euphoric, bullish. So actually thinking contrarian isn't such a bad idea. I think I'll do maybe about another 5 minutes of market overview, and then we'll jump into the Down Under report. So, starting out of the gate here today, what I noticed was not really too many new econs per se. Um, where are we here? Friday, October 18th, you can see actual data points for us to make decisions off in the market, kind of thin. So, it's not really like there's new economic, oh, isn't that weird? New economic information that's driving price. It's more, what is it? And you notice that Fed George, he spoke, maybe even speaking right now. Kaplan spoke, Clarida spoke, Kashkari spoke. I mean, the Fed governors are coming out in force today. And the general message that I heard, my interpretation from all these speakers was basically the same that we've heard. And this is exactly how I think this recession plays out. Is there's weakness overseas. International markets are tenuous at best. Global growth is in question. The United States is doing perfectly fine. And what I also heard too was inflation is relatively in check. No sort of cause for concern about runaway inflation at this point. And the irony of it all, of course, is at TRI, we look at inflation and deflation, and these guys should be freaking out right now. We are very much back into deflation. So you're absolutely right, Miss. And I'm not sure. I think this clarity is maybe I think it's a woman because of another word that sounds familiar, similar. This might be a man. This might be a woman. I have no idea. But Claridia came out and said, inflation's not a concern right now. You're damn right. Yeah, so somebody, Kevin, you know where I'm going with this? And only if either you're a female or you're married and have a better half would you understand that joke. I never heard of that before I was married, but I sure learned about it when I did. Anyway, side topic. Anyway, so the point of the matter here is I don't think it's a lot of data that's driving the market this morning. It's a lot of Fed governors, a lot of Fed speakers. And as you can see, market's kind of in malaise here. Also, too, remember, and we did this yesterday, I think it was. Might have been previous to that, I can't remember. Where do the S&P 500 boys that are running the S&P 500 options markets here, where do they want the market to go out? And more importantly, where do they really want the market not to go out? You can see open interest up top here it just doesn't exist on the puts. Lots and lots of calls up top here, so lots of incentive to slow this beast down and make sure that all these call options all expire worthless up top. And then down below, where the heaviest open interest, I see 45,000 at 297s, better part of 70,000, 295s, 294, 80,000, etc. So my hunch is they probably really do not want the market to go out below, say, this 295. It looks like that's the heaviest. You can see way down at 290, there's monstrous open interest. So on balance, I might argue that lots of incentive to keep her below 300, lots of incentive to maybe keep her above 295, sort of bang her around somewhere in that area. Through today would make perfect sense. So where are we right at the moment? It shouldn't surprise us. We're sitting 297.53. Big bleh. Nice to see we're coming off here. Why do I say that? Because as I had said earlier, when Ralph said that he went and bought a put yesterday on the low volatility, I was like, fuck it, man. If Ralph's in there buying, I want to buy too, damn it. So I went and picked up another one of these puts here. Reload zone on 4 hour, got a nice little inside bar. I don't think we got enough on the dailies to really call a top here just yet, but On balance, I don't mind the idea, good old reload zones. And I know, call me crazy, but I still feel confident that whatever the cycle low is, it should actually come in the end of the month. So we were actually above 78.6 there yesterday or this morning, and on that open this morning, I said, "Fuck it, I'll go and grab another one of these." Keep in mind, these are March options. They're a million miles away, so I'm not really pressed for time here. The strike price is a little bit lower, so I'm definitely playing that game to a certain degree. And Julian hates buying, just paying time value. But in essence, the options that I bought sitting around $2 or so right now. My cost on the entire position is like 223 right now. So I'm perfectly fine. Now I've got three. I certainly don't want to add any more, but I wanted to have that final put on the books. I'm not quite sure what the hell happened on the DIA this morning. I don't know whether that was a fat finger or whether some market manipulation, but it is interesting how they just popped it up through the top there, broke that top, and then slammed it down. We might find that this is subject to revision later on, but nonetheless, that's a funny looking Dow chart there this morning, and now it appears the whole market is rolling over hard here. So when we woke up this morning, it was really interesting. You can see where I have the words. Stock market was just sort of sitting there up top. That's where I bought that other put. Oil was quite a bit higher. Bitcoin's still floundering at its lows. But, just if I just look at this on balance, we started off the conversation this morning when I first posted this with everybody's asleep. Probably a lot of position squaring, options, business, all that kind of stuff was done through that sort of sleepy, and now we're starting to get some follow through. Bonds have put in a little bit of a bottom here. That is a TRI-SOF trade, so I'm not going to touch it. I've got absolutely no time constraints here whatsoever. Late winter, early spring option here, 50% level. Anybody who's done the level 3 should understand the logic here. It's pretty straightforward. I'm not in a hurry to do anything with this whatsoever. And if anything, a rally right back up top, I might add, because I only bought one. I really do on these options trades like to have 2 or 3 of them. Then that way that gives you some flexibility on the sell side. So just an FYI there. But anyway, the point that I'm just trying to make here is it looks to me like risk off is coming back to a certain degree. And now we've talked about this recently. Is Bitcoin sort of the ultimate leading indicator? Bitcoin is breaking down. It did break down a few days ago. And I was kind of waiting for sort of these other guys to play catch up here, and it looks like they're now starting to play catch up. So you can see just since when I first woke up, stocks have come off, and oil has come off. Anything else? I will say, anybody who's interested in stocks, I was talking about this with Kevin earlier this morning. I don't know what the hell is going on with my paper stock, but holy crap, this thing's on fire right now. But I would just simply say, and this does have a U.S. proxy. It trades, it's listed in the New York Stock Exchange as well. Like you can just go OSB, and you see it says NYSE. There's the U.S. proxy for any of our American brethren. I bought this, and actually it didn't break out on the U.S. chart, but I bought this I guess, better part of a month ago now, I suppose, on this W. And this is a weekly chart, so that was 1, 2, 3, 4, 5, 6, 7. Oh, almost 2 months ago? Wow. I was a little bit concerned, if you will. Is this W going to hold? You can see we pulled back, and it was just like, oh, Jesus, I'm going to have to get stopped out here. But then this week, and the weird thing is there's no news that's driving this, which doesn't really make a heck of a lot of sense to me. Very rarely do you see that. But clearly somebody's coming in here in size this week. Kevin mentioned before we got going, looking at this chart, really cute little Joby Gap set up there for the swing traders. Learn that shit. I mean, there's another Joby Gap. You can see what happened. There's a almost an engulfing bar. It is a candle body engulfing bar, very powerful. But nonetheless, Joby Gap move higher. Joby Gap move higher, and I mean this thing's just been a steamroller here. I have no idea what the fundamental drivers are, other than maybe people are thinking about earnings expectations are going to be a little better than expected, but no real driver there. Actually, it's interesting. We were joking about Lovesac this morning here, Kevin, and it's actually pulling back now. I saw first thing this morning, goddamn thing was just racing higher, and I was like, "Oh man, come back!" But looks like he's calming down here a little bit. I might be able to sneak in here next week. I really would like to have some of this stock on the books. Good looking little stock. That's about it in the stock space. I didn't really see anything that really jumped out at me. I'm still watching this Java. We were watching for a double bottom breakout here. Now you can see a new double bottom is trying to come in down here. Don't like the gap higher this morning though. That's a little concerning. But I do like this stock too, so I am keeping a close eye on him. Shipping stocks for the win. Kevin's shipping stock here just looks beautiful again. Another beautiful example of a weekly breakout here. So we got two stocks here on the weekly charts that are just ramping here. And this guy did break to a new high. That high now is 79. Today's high is 80 cents. Woohoo! Probably going to get a jump back up to a buck here. Big fat round number. Bottom of value. 50% rule. All those kind of things. That wouldn't surprise me here. So, thank you for the sage words of trading wisdom, Kevin. I snuck in on your idea here, and I'm feeling pretty good about this trade. All right. On balance, I think that's about all I wanted to talk about. Ooh, my other little shipping stock got whacked here. Ah, boo. So he's not quite ready to put in that weekly W yet. Thought he was ready to go. Okay, I think I'll leave the broader commentary at that for the stock market today, because I don't want to cut into to the down under report, but we'll just do a quick overview of good old corn. As we sort of talked about risk on, risk off, you know what Brian's thinking here, sort of medium to longer term. I really do think we need to come down into sort of this $5,000-$6,000 area here and do some technical cleanup, get us into a half decent trade location, and then start the game all over again. Sort of that look left kind of thinking. It shouldn't surprise us that we ran into some traffic against these lows. This took 1, 2, 3, 4, 5 weeks to play out. So 1, 2, 3, 4 weeks now so far. Here comes the fifth week. Get ready. Off the little bit lower term, there's that conversation about CME and all that, fractal kind of talk. Swing traders, algos fired short. Actually, it's really interesting, and I'm going to backtrack here a moment. Sorry, everybody. But we actually had some really cool algo signals here fire on the stock market this morning. And I really like it when algo signals fire with trade location, fire with market structure. So hopefully everybody can see the head and shoulders here on the S&Ps. You can see the algo went uber bear. And of course we were sitting up in a reload, actually just above a reload zone there. So it should make sense that this short trade seems to be working right now. I like the look of that trade. But I even like the NASDAQ even better. So anybody who's trading the NASDAQ, look at this beautiful uber bear. Nice little FU move. This is a total classic Sebastian FU setup. And I suppose once I've sort of exhausted my interest in running these day trader models, I'll probably jump back and do like a Sebastian SFU setup. It's supposed to be SFU, Sebastian FU. But anyway, perfect example of an FU move here. Absolutely perfect example. Pop it up through the top. Remember we saw that Dow chart. Is there some funny business going on here? Who knows? Run the stops, and then in comes the top, and down you go. But great analogy of algo signal with respectable location against previous highs. You could even argue there is we need like a male and a female of these icons, right? So we need one for Hogue and we need one for yeah. So you already know where I'm going. And a nice little female one for like Colleen. So Hogue and Colleen sitting up here. Maybe I'll go like Hogue is a gnarly dude, so maybe we should put him like I don't know, maybe orange, and then we'll put Colleen as hanging out, trying to be a value trader. Should be I don't know, pink. Do we have pink on here? Do you like the color pink, Colleen? I don't know. Anyway, just playing. So there's Hogue and her hopefully protege, Colleen, sitting up there shorting above value. Stock market seems to be coming off on an awful fast clip here, eh? Keep in mind this is a delayed chart, so it's probably not. It might be, but who knows? But anyway, a really good example of a nice algo signal, and you could argue location, indicator confirmation, structure, go. Anyway, okay, so back to our conversation about Bitcoin. Algo's fired. I think I can show you that here. Went Uber. Do we have structure with the Uberness? Nice descending triangle here. Gee whiz, what a coincidence. That's off of a bot level. So I think not only did the botters get a signal, it's a monstrously huge pattern, though. So just be cognizant of that. And, all this back and forth here, the botters, they're not doing anything. They're just sort of sitting there. I'm in my swing trade, just twiddling my thumbs. Alginators, I do kind of like the idea of, number one, forcing yourself to take partial profits at 2-to-1 objectives. So just have this order out here to take partial profits and, move stops to scratch should we hit the 2-to-1 on remaining, and then use market structure to trail stops. But I would feel totally comfortable if somebody had taken this algo signal and said, look at, half of the move has been made. Don't want to see a winner turn into a loser, so I'll move my stop to scratch on the remaining and just let the trade ride. And you can see here a little bit of, pullback, but never got back to the entry, and now we just broke to new lows. So they're just sitting there doing nothing right now. So both algo and botters on the swing trade basis, I think they're short. And then sort of finish off that conversation, what are the day traders doing? And if anything, this is such a great commentary. Kevin and I were joking about this earlier. Should we maybe build an iteration of this day trading plan to enable the day trader to hold on to part of their winning position? Should a 2-to-1 get hit? I don't know. Do you think, guys, is there a case to be made that maybe this trade could have produced a little more than 2-to-1 risk reward? I mean, look at that. Holy fuck me. It's ridiculous. You see this about once every 10 trades. A lot of the trades, they'll come right to 2-to-1 and just say, okay, I'm done. And every once in a while, you get one of these where it just goes absolutely insane, right? And if you had used sort of like that trailing stop method and maybe you got busted out on this new market structure bottom, okay, well, on balance, that produced a nice 18-to-1 risk reward. 18-to-1! Fuck me! I swore twice there. Sorry, everyone. But 18-to-1, that's ridiculous. So I'm going to give that some thought about how we can incorporate that into this little date. And I think that'll actually make guys that are sort of questioning the commission efficacy of these kind of models. If you can bang out every once in a while a nice 10-to-1, 15-to-1 kind of crazy ass return, does that make up? Yeah, well, that's kind of what I'm thinking. So Kevin says here, sell 2/3 at the 2-to-1 objective and just let that other 1/3 just ride and just see what happens. And of course, move stop to scratch, right? Make damn sure to move stop to scratch. You don't want that 1/3 that you did take on like this to actually come back and lose you money. Don't want that to happen. Anyway, so that'll be sort of future renditions of the algo. Overnight action, if anything, great analogy of just a trader's life. You can see after that monstrous win, well, I mean, and it was just 2-1 for the purposes of this. Cute little inside bar came in and get the fuck out. All right, then an inside bar comes in and boom, you hit your target. Here's another one. You know, I mean, if you had trailed stops on this, and I mean, this is just hypothetical, but, you know, could you get some of that? I mean, there's 8-1 all the way down there. But anyway, that's here nor there. So, the point I'm just trying to make here is overnight trading, you know, loss, win, loss, scratch, total day trader's life. And it looks like we're getting another signal coming in here as I'm speaking. So, if you were running this plan, you would throw your trade metric right over that nice inside bar. You'd risk to new highs, which that appears to be 749.5. We can knock that down, 749.5, and the low here is 33.50. So we'll say 33. Give yourself a little bit of wiggle room. All right, there it is. Set everything up for 2-1s. And take a screenshot. So hopefully everybody can see day traders on this particular model as it stands right now might actually be getting ready for a trade here. And you have no idea what the outcome is going to be, but you got to log, you got to diarize, you got to journal, you just got to follow your plan. Anyway, why don't we put an alert on this, and then that way we will know if this trade fired. There we go. It's just sitting there. So as I'm playing away John's, whoops, what have I done here? As I'm playing away John's video here, you might hear the computer come alive here. Okay, so that's sort of my broader picture. Hopefully I've given you a pretty good idea of what I'm seeing on the corn. Altcoins, man, just sort of muddling along. You know, where's the BNB? BNB sort of inside bar here. If we break these highs, then I think altcoin frivolity continues. But at the same time, too, you can see the potential double top. If we break these lows, 1720, then I think your altcoin bull probably gets put back in the box. You know, little outstanders recently that have done well, but please don't chase. This Doge worked its way all the way up to 37 sats. My hunch is if you did want to participate, notice there is the original bottom. There is 61.8. There is 78.6. Probably best to concentrate in this area, so 25 all the way up to 28. And notice that's right against the actual place where everybody is long, or the POC, right? So, you know, can't chase. You can see, had you taken this head and shoulders breakout, and actually, I think you could probably make the argument trade fired there. You'd be up a chunk, maybe. I know guys like Kevin are constantly banging back and forth, buy and sell, buy and sell. I wouldn't fault you if you said, well, Brian, it looks like this head and shoulders objective has been hit, so I took some profits. Hey, there you go. Look at that. As we speak, the day trader signal just came in. So day traders are now officially short again. Woohoo. So we can, okay, I won't waste time doing that, but let's see what happens. So now if I was running this, I would just say, all right, let's take our alert. Keep in mind this trading plan basically says that if 50% of the anticipated move is hit, then I'll move my stop to scratch. So I usually like to take a little 50% rule tag so we can see that there's the 50% level. I'll drag this alert bar up now to the 50% level. So if that level's tagged, then we can, you get one of these little notations. And you can see, I mean, this move stop to scratch little sort of rule, I think has helped this model out quite a bit. Here's a good example. 78.92 was the 50% level, and we hit 78.91. So boom, on this counter trend rally, you get blown out at a scratch. So we will keep an eye on whether 79.1650 is hit here over the short term, and we'll also put an alert if you were trading this. And really, there's nothing to do until you see either of these two levels hit. That's interesting. Wonder why it was changed. Okay, I've talked quite a bit here this morning. I actually wanted to show you the Down Under report right away, but holy moly, I got carried away there. Sorry, everyone. So let's move on to the Down Under report. Where is it? There it is. All right, so we'll put that there. And everybody enjoy the comic stylings of Johnny Salmon, and the Down Unders. That sounds like a music group. Johnny Salmon and the Down Unders.
Welcome everybody to the Down Under report. I'm John Salmon on the side, coming to you from a beautiful sunny Brisbane. We got for you today a few ideas, and I think they're all pretty exciting. So first of all, we do have a weekly hangout. It's the AU weekly hangout, and it happens at 7:30 Brisbane time. So you'd have to check the time in your particular time zone. And I'm having a really great time in this hangout. It goes for about an hour. And the reason I'm having a great time in this hangout is because trading can be quite lonely at times, particularly for us TRIers, us TRI folk. We speak a different language to the general trading public. And the meetup in Canada was amazing because we all spoke the same language. And in these hangouts, we all speak the same language as well. So I find my trading day quite lonely, and what I like to do is put on podcasts and have someone chatting in the background while I go about my day. And the podcast makes me, if I have a podcast on, it makes me feel like I'm in a social setting while I do my work. So everybody's invited to the AU Hangout. And if you just want to spend some time around traders and hang out with us, you're absolutely welcome. Look, we're just a bunch of guys trying to figure this all out. And I find the input from the other guys really inspirational. I think these guys are absolutely talented guys, and they're all doing something completely different. And it's incredible to see what they're up to. So in the hangout, I discussed my Forex trading plan, which is now finalized. Joey has two absolutely amazing stock ideas. If you remember Crypto Roo from his epic crypto spreadsheet days, look, he's taken those ideas to the stock market. Anyway, I'll show you the charts. Michael talked through his algos and new software he's using, and that software is next level compared to TradingView if you want to do algos and things. And finally, Sin brought it home by reporting about his life at the Top Step Combines. So if you want to be a day trader, it's worth checking out, how he's going and what the day-to-day looks like. Now, I just quickly want to share a tip about setting calendar alerts for prints. So in my calendar, I have a 4-hour prints, I have the daily prints, 8-hour prints, and 12-hour prints. I was talking to Colleen on the side, and we'd found a nice W on ETH 4-hour, ETH USD, and we're talking about, do we chase this? What do we do here? It's not going to come back. And your only option is to get bids working at the neckline if you miss a W confirmation. You can't chase. It's going to ruin your risk return very quickly. And if you're looking for a sensible amount of profit, that sensible amount of profit is based on 2 to 1. If you're getting 1.5 to 1 because you chase trades, it could be the difference between being profitable and not. But the other thing you can do is set calendar alerts for the fresh candle prints. And so go into your calendar, throw in the alerts, get it to send you a reminder or an SMS or an email, and you can actually go in on the confirmations and take the, if there's a confirmation, you can take the trade. Now, to take that to the next level, with Colin S., he was talking about getting an exchange listing, let's say Bixi or Binance, and you start with a TradingView watch list of the entire exchange. And every few days, you go through the entire list. You first tag the ones that are in your location in red on the TradingView on the side, the watch list on the side. Then over time, you re-tag the ones that now have divergence in orange. And so now you have a list of a small amount of crypto with location and divergence. And now all you need is a candle print. So the next step is to get the candle print. And the best way for me to do this is to get the calendar alert, get the fresh candle print, see if you've got a W, and take it. So I think that's a pretty powerful tip, and everybody can sort that out in their calendar very quickly. So I'd like to get into Joey's stock ideas because they are amazing. Like what this guy's doing is just incredible. Thanks, Joey. 1 + 1 = 3. All of your ideas I am definitely going to trade in my super fund. Just 0.5% here, 0.5% there. Once actually, we've got some great ideas here. We obviously don't have any structure. We don't have any weekly Ws. But these are just amazing ideas to be watching. So the first one, Joey, I don't know how you find this stuff, mate. It's incredible. So this one is called Imuron Limited. So this is Imuron. The main reason I'm excited about it is they've got a treatment for travelers' diarrhea, okay? And the difference about this treatment is it's preventative. And all the current travel sickness drugs on the market are curative. They're reactive treatment drugs. So you get sick and then you take it. These guys reckon they've got a traveler's sickness pill that you can take and it prevents traveler's diarrhea. And from what Joey understands, it's the only one around that's coming up. Looking over the share, the stock itself, 176 million. It's in pharma. If you've done sector rotation, you might understand why pharma might be good to be looking at this stage. Operating at a loss. If you want Joey to explain this far better than I can, just go to the AU Hangout. We got this humongous spike on the announcement of US funding. They've been granted 5.5 million in funding from Naval Medical, a US Naval Medical Research Center. Okay, well, I really like this idea. So we got some gaps down here, 12 cents and 11 cents. They're definitely very compelling. If you want to know more about that, check out the AU Hangout. The other one is, I was in Vancouver, and that's a place where, marijuana has been legalized. What we've got here is, apparently in Adelaide, or in South Australia, we're looking at legalisation in the pipeline, and we're looking at the industry growing in Australia. What we've got here is slightly different. This is a portfolio investment manager, and they're investing in companies that specialise in the cannabis value chain across the world. They announced a share buyback of 10 million shares in June 19, and there's this sort of dividend thing coming up where they've announced in June 19, they've announced that they will distribute 20% of their annual profits after tax, and I assume that would be in July 20. So that, to me, appears like a dividend. End of financial year 20. So you get that in July. The numbers for 19, 21.6 mil profit, up from 5.1 in 18. Bunch of cash in hand. They got 100 million in assets under management. Of course, the liabilities are low because of the nature of what they do. Joey's found the salary of executives, and that's super important. It seems reasonable. So we've got 6 executives, and they're getting about 100K each, which, if you understand the exchange rate, it's not a lot of money per year. But they're getting a whole bunch of shares as well. So Joey's got the lows down here, like a candle body low, and I think he's got the W here scoped out. I mean, look at this. When was that? That was December. So we've gone straight back down, test those lows, and pop back up again. So that's a very suspicious candle for me. Two amazing ideas, and Joey's coming up with these every time we catch up. And thank you very much, sir. I'm definitely going to be hunting these ideas. Last of all, I just want to talk about an experiment I have in forecasting the broader market. what I've got here is the put-call composite, and to get this, you need to throw in 1 minus PC. So total put-call ratio composite. I don't know what total means, and I don't know what it measures, and I don't know why I put 1 minus, but if you put 1 minus, you basically flip the chart. So the next thing you have to do after you separate, after you get it on your chart, is move to new pane below. And I just started digging around. I was thinking, well, maybe I could use this as a divergence indicator. Not sure how I got that idea, but the results are just really amazing. And I think if I can predict the trend on the S&P, my theory is that I can predict the trend on the broader market. And once I've got my forecast for the S&P trend, I can then dig down into actual assets, thinking about what's risk on, what's risk off. If the S&P's risk on and it's trending up, then what risk off is trending down, and can I find an asset pairing that takes advantage of the divergence of risk on and risk off. So what I started doing is looking just for AMs and divergence. So, you've got one here, and there's NEM, and it confirmed, well, you could say it confirmed there, really. And we've got a resulting downtrend in the S&P. And I guess the other crazy thing is I looked at the date, 30th of Jan, okay. And so then, I went to the next month, and, we've got a W here. So there's the W there. I guess you could argue, well, that's not a divergence. So I guess if you want to be technically accurate, you could argue that it confirmed there. So let's move that across. And, we've got some sort of uptrend. And the date on that is, 4th of April. That's also the beginning of the month. Then, we didn't get really any signal. Like, we got a signal here. Look, 2nd of July. But the signal itself, the market didn't move the same way. So, there's nothing that's completely accurate. So we got a divergence building here. We got this like an M confirmation. I think you could argue it confirmed there. 4th of October, that's the start of the month again. And we've got this downtrend. Oh, wow. And here we have another divergence building, confirmed right there. So 30th of October, wow, that's the end of the month again. It's really strange. Obviously, this signal wasn't great, but you did have that initial uptrend, and you could be trading other markets. And then this one's a trend line break, which may or may not be worth looking at. But nonetheless, we did break the trend. I wonder if we have a MACD divergence as well here. And we got the downtrend. And, on it goes. We get some wrong signals or some confusing signals. Here we got a trend line break plus an M. So up, down, up. It confirms right there. And, of course, the divergence itself is prices going up. 1 minus put call is posting lower highs. And what's the date on that? 30th of April. Wow, that's the end of the month as well. That's really strange. And on it goes. On it goes. 3rd of June, 30th of July. So where we are today is, it doesn't work every time. And we've got this chop here. It's, I'm not getting really any signals. You could argue we had a trend line break here. I don't know if trendline breaks are that valid. See, I like M's, and this is a stretch, but up, down, down. So yeah, I don't know about this one, and I guess the takeaway really is that we're just in this crazy choppy market. We have been for a while now. And I don't see any direction. I'm really interested in the 30th of October. If we do see some sort of divergence coming, we may just have a flat market. Mind you, with the letters Trump's writing to dignified people around the world, this market could do anything. So, it's worth a look. I'm going to be checking this out and using it going forward. How do I use it? Well, if we've got a lovely uptrend here, so I then go to charts, gold pairings, USD pairings. I'm using this as my first trend, and then I'm going to the chart and I'm using 8-hour trend plus 4-hour trend to take a trade on the 1 hour. So I've got 3 different trend confirmations, and that would be my first reason. Then I'm looking for divergence, and then I'm looking for market structure. So I hope that was of value. I really wanted to come with ideas about the market, and I'm not sure if I'm doing that effectively, but we've got some cool tips here, your calendar. And, if you guys want to come hang out with us, we're here and we'd love to hang out with you. So, Brian, I might get you to share the show notes in the general chat. And thanks very much, guys. Have a great weekend. And I'll chat to you next time.
All right. What a great job. That was totally cool. Gotta say, Johnny Salmon, you are learning this stuff big time. So, as I sort of started off, and I probably should have done it after the presentation, but just sort of follow up with what Johnny was saying there just a moment ago. I thought I had my breadth charts up here. Here we are, way over here. So the put-call ratio, as also listening to you, Johnny, when I was when we played that there, put-call ratio. Notice it said composite. So I have a funny feeling this is based on the NYSE Composite Index, and I think actually it might do you a bit of favor. Notice that this advanced decline line is based off the NYSE. All of the stocks on the NYSE. So might do yourself a little bit of a favor. Instead of following the S&P 500, you might want to look at the NYSE Composite. Well, should be index, but let's see if we can see where is futures indexes. NYSE Composite Index. So I do also know that there is a futures contract on the NYSE Composite. So that's the only thing that I might suggest that you add to that study, John. Might give you, I wouldn't be surprised if the correlation is a little bit closer to your signals. I don't see it on here, but I do remember years and years and years ago we used to trade the NYSE Composite. So let me see if I can find you that symbol, John. But excellent report, and I really like, you've heard Brian say, and actually we were even talking about this yesterday in the lounge. Let's see if I can find you the picture. Just give me a second here. My job here at TRI, to a certain degree, because you guys are sort of brand new to all of this. Question is, can I find it quickly? But my job is to just do nothing more than just show you all the different tools, all the different, and I like to use the analogy of the dinner table. There we are. And ironically enough, this isn't even a formal setting. But just based off of this, you can see there's about 16 different things on this. But I don't even see my shrimp fork. Where the hell's my damn shrimp fork? So the point being that my job, maybe this is RSI, maybe this is Fibs, maybe this is GAN, maybe this is fractals, maybe this is Willy, whatever. The point is my job here at TRI is to just try and introduce you to all these different tools and just simply explain how they work, the sort of mechanics behind them and how traders would use them. It's your job as a trader to decide, hey, you know what? I really like using put-call ratio, and I'm going to eat my steak with a soup spoon. I don't care. If it works for you, great, go for it. But the bottom line here is I want you to try and find 3 unrelated reasons out of all of this to eat your dinner. You know, maybe you're going to use a salad fork, a soup spoon, and you're going to drink all of your wine out of a water glass. If it works and it produces results 2/3 of the time in your favor, and you don't take too much risk, rock on. And what I like about what I'm seeing out of John here, and you even heard it in his report, is he's built out his trading plan. He's understood what's working for him and what isn't. He's open to incorporating new ideas. And he's just in there running his small business of trading. So, fantastic job, John. Really, really good stuff. And I love to see his progress, his maturity as a trader. Just fantastic. And I think he's going to be a really good role model. We're giving him lots of practice through these down under reports. My hunch is John's going to be a pillar of this trading community, especially in Australia, going forward. Top notch work, sir. Top notch. Okay, the only other thing I'm going to do here is I'm going to try and upload. I did download John's PDF report for you yesterday. There it is. And I've uploaded it to the lounge. So if you want a copy, and maybe Murat, when you do the summary later on, you can include the PDF link to John's report there. The Down Under report. And that'll give everybody a nice little sort of sheet to work off of while they're watching this video. So, okay, everybody, I think we did a pretty good job of giving you some value here today. I hope you appreciate the effort everybody puts in. Julian said that he's going to try and do his report pre-recorded and play catch up a little bit. He apologizes to everybody for missing the daily brief yesterday. We have, what do we have? Level 2 class in 1 hour. So I should probably wind this up. It is the top of the hour now. And shout out to you, Colleen. John's obviously thinks highly of you and included you in his conversation. So good to see you interacting with Site Peeps to try and become better traders. Excellent. Take advantage of this TRI resource and the community while you've got it here. I think this is an excellent incubator for all of you guys, just to sort of get your feet under you. Okay, why don't we leave it at that? Have yourselves a great day, everybody. Appreciate the input and contributions from the community to make this a better experience for everybody. I will see class in about an hour. For now, Kevin and I got to go do the daily brief recap. So have yourselves an awesome rest of your day. All the best, and bye for now.